I'm no genius, but I've got someone smarter than myself to break down the Genius Act. You're watching
The New England Take.
Our alleged smart person of note today is Professor of Law Seth Oranburg of UNH, Franklin Pierce School of Law. Welcome back.
Thank you, AJ. Alleged.
Alleged. It's kind of entertaining. You're turning into like this pirate lawyer on my show. We're talking guns last time. We're talking crypto this time.
Yeah, I guess I'm your resident crypto anarchist. I'm the closest thing you'll find to a libertarian at the law school, so I suppose I'm the guy for that stuff.
Exactly. So, you sent me a law review article that you posted. You sent it to myself and Steve McDonald over at the Granite Grok, which I should mention, you're listening to this on WKXL, 8:30 a.m. on Saturdays, nhtalkradio.com to see what they got going on over there, and as well as granitegrok.com does share the show out every Saturday, so be sure to check out what they've got, all sorts of cool articles over on their outlet, and newenglandtake.com, like and subscribe if you're checking us out on YouTube or podcast platform. So, start off with the Genius Act. I am one of those guys that kind of understands a bit about crypto and how it works and the issues that have arisen with the SEC and everything of that nature. It's been a total nightmare for decades, essentially, when it comes down to it. But give the elevator pitch for the Genius Act. What's it aiming to accomplish?
The Genius Act makes federal regulation for what are called stable coins. And stable coins they're like Bitcoin, but without the price fluctuations. At least that's the promise. So the elevator pitch is basically these things are important, but they're not safe. So let's make them safe through federal law. And the concept, if it works, is I think a good one, because people don't make really, really expensive products if the government can come and shut you down. It's what we would call a stupid business model, right? Like, that's just not very smart to do something illegal and then get busted, because that's a huge risk. So, if you're smart about your business, you try to de-risk the legal. So call 555 Seth Oranburg. Now, but that's a huge part of it. Now, there are companies that enter into gray market areas and try to change the law, and there's some interesting stories about crypto companies trying to do that. But when you bump up against federal regulation and the feds can come and shut you down, you might be really hesitant to create new stuff. So the Genius Act should provide clarity, although there's a different act called the Clarity Act. These have great names, right? But the Genius Act is particularly about, it stands for guiding and establishing national innovation for U.S. stablecoins.
And that's really important. Just at a baseline, we want the United States to be the leader when it comes to this, because we don't want whatever the Swiss are up to, for example, has always been the meme forever, is like, oh, you just hide your money in the Caribbean or Switzerland or different things like that and have it disappear. You want to have us be at the forefront while also having it in a way that is not endangering what you've invested into whatever cryptocurrency it may be, which is a tremendously complex thing to just outline in 10 seconds like that, but that's really important. You want the United States to be the leader when it comes to it, so that the businesses come here, because we don't exactly have, one of the big deals why Northern Europe especially has been really important in the blockchain and crypto mining and things like that is because they have all sorts of other energy supplies that are able to pay for it. We don't have that advantage here in the United States for the most part. Yeah, you can set up data centers in the desert with solar and different things like that, but it's very expensive to enter the crypto space in a large corporate sort of environment. So if we can bring them here through ways that are saying, hey, we're not going to crack down on you, we're giving you a way to do this in a legal way that is not going to magically turn into an SEC issue that you don't understand, or FEC issue or anything like that, is big.
Yeah, and for the listeners, by the way, the SEC, the Securities and Exchange Commission, are the federal police for investment contracts, and they can levy huge penalties. They've got a ton of power. I mean, a crypto company called Ripple got slammed with $125 million, and that's 125 followed by 6 zeros. That's a huge penalty. Plus, they got an injunction shutting down their products. So when you're talking about, feds coming and costing you like 0.1 billion, and enjoining you, preventing you, stopping you from your business model. I mean, that's a game ender. And a lot of what the Genius Act does is it defines stable coins as not securities. And so the SEC can't enforce them because that's beyond its jurisdiction. This is good in some ways, as long as we get the definition right. But it has some oddities that I'd love to play into.
Yeah.
But the idea here that I think we clearly share is we both want America to lead in innovation. I'm huge on entrepreneurship as a way to lift people up, and this is a country built on entrepreneurship. So the ability to create things here and make stuff here is still alive and well, but the feds needed to get out of the way on some of this stuff, in part because we have laws that date back to 1933 and rulings on them that date back to 1946. And I mean, I don't have to tell you, it was a different time, right? Where we didn't have these same sort of things. And so applying 1946 law to 2025 technology can mess stuff up.
Yeah, definitely, especially when you're talking this space where it hasn't even been clear is investing in blockchains and meme coins and things like that a security that is regulated under the same rules as a publicly traded company or gold or something of that nature versus no, this is money. Well, guess what? If you call it money, you have a whole other set of issues where you're going to have the Secret Service coughing at you here very quickly too. Like to really specify this, let's maybe if I could have you dive into some of the stuff around stablecoin and maybe some of the oddities you said when it comes to this. Why stablecoin?
Yeah, absolutely. So the word can be a little deceiving. So maybe even to break it down a little farther, I'm just going to just very, very brief, like broad category, you build stuff on blockchain, and we can call that category of stuff digital assets. There's lots of them. I can talk about them, and we'll come back and talk about some other ones. Cryptocurrency is a type of digital asset that has a purpose of functioning like money. And the purpose of money is it stores value and it provides a medium of exchange and a way to price stuff. So for example, like if I have $1 and I put it in my glove box in my car where I keep it for tolls, it doesn't go stale like the orange I accidentally left there last week. It literally, like that's one principle of money, right? It holds its value. It can be exchanged for things like that toll that I want to go through, and it sets a price. And it's $1 to drive up I-93 from Manchester to Concord. So, this dollar bill has the functions of money, and cryptocurrency can have those functions too, can function like money. But cryptocurrency is also very speculative. People invest in it because they think its value will go up. And so the price of a Bitcoin can go up and down really quickly. And I've seen days where it swung 40%. And imagine like you're on the way to Walmart to pick up steak for dinner, and you're thinking it'll cost you like $20. But by the time you get to the store, because Bitcoin has now changed its price completely, that same steak is $30. Like you can't run an economy that way. So one way that we can have some of the advantages of cryptocurrency, and I guess I can mention some of those in a second, but it's a different payment system that offers a lot of efficiencies without some of its costs, this volatile price change, is that you make a commitment that every single one of your coins, your tokens, is pegged or worth $1, and that your company, let's call it Terra USD, which was a failure, which is interesting. But let's say your company is Terra USD, you offer the TUSD coin, and you promise that for every one Terra coin, you, Terra, have $1 in a bank account somewhere. And that keeps the price stable because it means that at any point you can exchange it for exactly $1. It would be silly to pay more than $1 for this thing, and you should never expect to get less. So that would be a stable coin when it's pegged to dollars.
But which is how money used to work back in the day, where the dollar was tied to gold as opposed to our economy.
Thank you, President Nixon, right?
Yes.
So yes, from effectively Bretton Woods, which I just visited up in, it's just awesome to see the gold room where this stuff that was literally the room where it happened in 1944. We went on the gold standard. America became the financial center of the world. That lasted till Richard Nixon in 1971 unilaterally took us off the gold standard, in part because France kept asking for their gold back. Like they kept on being like, here's some dollar bills. Can we please have like shiploads of gold? So there were reasons. But in any event, that's right. A dollar bill used to be something you could exchange for gold. And a stable coin is kind of like that, where you can exchange it for a dollar, but it's a little bit of a house of cards because you can't, because dollars aren't built on anything. I just want to throw one more term out there. As people in this space, they talk about fiat money, like the little car, fiat. And basically what people mean is that money that governments issue that has no value except that the government says it does. So it's actually a little bit weird and not entirely in keeping with the crypto anarchist kind of movement that is opposed to fiat currency, that you'd have these stable coins and what backs them up is fiat currency because you're still playing in that system. But that's the basic idea. If you always can get $1 for your token, then it has a much more consistent value. But since it's this digital thing, instead of a dollar in a bank account, it has some lower transactions costs, let's say. It's easier to spend it and use it for certain things, especially international transfers.
Now, you wrote an article that is in Bloomberg Law, which is really interesting, which I will put in the episode description, kind of diving into how it revives the Civil War era banking problem for states. Can you break it down a little bit? What does this revive?
That's a big claim, right? So
Yeah.
let me take you back to just before 1830. So basically, before even Civil War era, but in the late 1800s, not just states but individual banks were offering their own bank notes. It's one of the reasons they're called bank notes. They're called greenbacks now because actually this is what created greenbacks. But the term banknote, literally, you could go to like the I don't know, Bank of Wyoming, and you would have a $5 note from the Bank of Wyoming that you could only exchange it there. And some of them are really weird and cool. Like there are some that say on them, like redeemable for $5 or the equivalents in wood or coonskins. So like, yeah, $5 for the coonskins, right? Just in case they ran out of money. Well, there are pluses and minuses to a decentralized system like this. One is people don't necessarily agree that Bank of Wyoming dollars are worth the same as Bank of Missouri dollars or whatever. And you also have these small banks that when they fail, you can easily have kind of runs on the bank. Does the bank have enough gold or whatever to deal with these trade or enough coonskins or wood? So there was basically a bunch of micro bubbles and failures. And in 1830, America passed a law that basically said only the United States federal government can print money in the United States.
And there were also corruption issues of the company store and things like that, where businesses were saying you can only, we're going to pay you in money, but you can only use it at your store that we have created for you to purchase said items, which is a very corrupt system that some, especially out west, ended up having.
That's absolutely true, and I wouldn't even call that stuff money. That actually looks a lot like a different kind of token. We'll call it a utility token. That's like instead of being paid in dollars, you get paid in like Dave and Buster's gift cards that you can only use to play skee ball. I mean, but yes, that was also a problem that was being addressed there. But to be frank, AJ, the bigger problem was that this caused a national recession, right? Because like it wasn't just that people who were living in abject poverty were getting hosed, which was bad, but also that the entire financial structure of America had a huge meltdown around this. And this created the federal banking system, and it also allowed the United States to control monetary policy much more tightly. And so now you see things like the Fed, who is setting interest rates and things like that. And they can do that much more easily because of the central currency. So that's like the history. And to kind of fast forward to today, my observation on the Genius Act is that there's one word that got changed between when it got introduced and when it got passed. And legislative history is actually really important in law. One way that we can understand what a law means is we look at how it changed over time, because that can really show that there is intentionality. It wasn't just accidental or boilerplate. And when you look at the definition of person under issuer, meaning like who counts as an issuer of a stablecoin, meaning who is regulated by the Genius Act, it says other business entity as the broad descriptor. And it used to say other entity. So the word that's missing is business. The word that's added is business. So what's the difference between other entity and other business entity? Well, what are non-business entities? States. So the observation is that states can issue state stable coins, and Wyoming launched theirs yesterday, by the way. First state. Wyoming stable coin, WYST, I think it's called. You can buy it now. Or, interestingly, about the company store, I'm going to Wyoming to talk about cryptocurrency, and I'm getting reimbursed for my trip because it's a business trip. I'm getting flown out there to give a talk, and so they're paying for my flights. They're paying it as an honorarium, and I have the option of being paid in Wyoming stablecoin. Just so I'm in this thick, right?
And I just
part of the
want
promise is you paid quicker,
Yeah.
But
I just want to plug our legislature. As crazy as things are in New Hampshire sometimes, we haven't done this yet. So let's give a little bit of credit to our free staters sometimes.
I mean, give them a little credit, but at the same time, this is a state that just established a Bitcoin reserve, and I would be shocked if New Hampshire doesn't try to offer a New Hampshire live free or die coin before the end of 2027. I said it here first. The live free or die coin is coming, and New Hampshire is going to offer it. I think it's you can mark your calendars. I give it 18 months before we see one of those.
It's inevitable. It will definitely be brought to committee this fall. So what is this good? Is this bad? It's chaotic, but what does it mean?
I mean, it means we're in for more change rather than less, and this law didn't solve everything in one fell swoop. It does mean that businesses that want to offer stable coins now have a way to do that without worrying that the SEC is going to knock down their door and say you've been issuing securities, provided that they comply with some pretty onerous requirements. The problem with the pretty onerous requirements is that states don't have to comply with that stuff, and so we're in a weird position where what I'm seeing is that states actually have a built-in regulatory competitive advantage against American private business that would issue stable coins. And that is it's at least weird, and it's definitely interesting. But basically it's hey, private industry, you can go ahead and compete vigorously with one hand tied behind your back. But, states, if you want to issue your own coins, not that you're in the business of inventing this stuff and coining money, but if you want to have your own coins, you can do it without being subject to a lot of these restrictions and regulations. Now, states might have, I think the silver lining is that states have a lot of political pressures that businesses don't, to not do horribly nefarious things. So Wyoming seems to be doing this responsibly, where they're going to have more than one US dollar for every Wyoming token they issue. It's going to be over collateralized, over securitized, according to them. Of course, these things are always true until they're not. We were on the gold standard until we weren't. So, is it good? Is it bad? I mean, yes, it's good in the sense that it takes a huge chunk of stuff out of the SEC's hands and prevents them from causing huge mayhem because of being able to monkey in new markets. It doesn't go far enough, and the state stuff is going to be weird. I mean, do you really want a world where states are competing with private business to offer cryptocurrencies that rival the US dollar? I just don't know if that's the world we want to live in.
Yeah, it's one of those things where it could either go crazy or it'll just flail about and not go anywhere. It's kind of my prediction. It's one extreme or the other.
Well, I'm certainly getting paid in WYST when I take this trip, and
Might as well,
right? Might as well do
get
it
in
once,
early.
Right? So, yeah. Well, theoretically, this stuff shouldn't increase in value. Theoretically, this is not an investment. Theoretically, the only reason you do this is because last time I went to Wyoming, it took 55 days to get paid. Not that that's the end of the world, but for most people like me, I'm not paycheck to paycheck, but I try to make sure my reimbursables come in before I pay the credit card bill. And I wasn't able to do that because their procurement process is so slow. And a lot of states are like this, where net 45 is if you're lucky, net 45. So the prospect of getting paid in 5 days with something that is, potentially transferable is it's useful and it's interesting and I mean I get the use case. I don't know. I mean, if every state has their own stable coin, or if many states have their own stable coin, it's is that. Meanwhile, Donald Trump has said there will be no central bank stable coin. So that's a huge position of this government is that the United States is not going to do something similar and offer like a U.S. stable coin. And it's not clear that we're going to make private industry competitive enough. Other places are offering this. And I mean, we don't need a world where there's like 14,000 different stable coins. That's just confusing.
Now, I guess this is something we kind of glossed over, but at the super most basic level, why should your ordinary normie care about stablecoins? Like, yes, we talk about to get paid, it could be very quick, it could be instantaneous. Paying things could be very instantaneous, but outside of that, most people use their cards nowadays, or Apple Pay, or Google Pay, or things like that. What sort of value is a stablecoin offering that our current digital banking system doesn't do?
Well, if you're on the normie side of I have a card in my wallet and I'm a consumer, probably not much. But if you're on the normie side of I don't know, I have a tailor and I take credit card payments, you might be sick of paying 4%. So, I have a small law firm and I have a payment processor. I pay them $20 a month plus 4% on every credit card transaction. And that just eats into my meager profits. I would rather keep that 4%. And, Visa, MasterCard, American Express, Discover, they all range between 3.5% and 4.5% processing fees, but they have a stranglehold over that market. So normal people might care because small businesses can now, and big businesses can now potentially transact with normal people without paying the same kind of fees. And there'll be more competition. More competition should be lower fees, better quality. Faster payments was another thing. So if you are on the consumer side, do some work for a state or some other institution, you might get paid in stable coins in 5 minutes as opposed to 2 weeks. Yeah, those are the ones that come to mind. And I mean, basically, it's a more competitive industry. That I guess the last thing is a lot of people send money to family abroad. So if you've got like family in Belize or something, and if you come to the States and you're working here legally and you're sending money back home, it takes a lot. It's much more than 4% when you go through Western Union. It's a pain. And imagine just instead of having to go to Western Union every week and deal with all that risk, you just went onto your app and moved a couple coins into someone's wallet, and your family back home could make rent. That would be a lot better for some people too.
Now, one of the issues in the news media space and kind of political space too, when this act was signed, was there's a lot of issues when it came to the old rug pull of the meme coins with Melania and Trump coins that came up after he was elected, and all the questions as to who did it and why, and was Trump honestly aware? Seems like he was aware, but who really knows, because no one wants to release any real data on anything. Does the Genius Act and various things arising from this do anything to remedy this meme coin issue? Or if people don't know, like I'm going to be super basic. I can't go too in depth in this whatsoever, but it's a way that people are literally defrauding people by by screwing around with the cost of some digital currencies, so that the person who introduced the coin or was involved with it can make untold millions of dollars with some of them, depending on the level of it. Does this address it at all?
No. I mean, short version, no. It doesn't meaningfully address this in any critical way. If you want like the laundry list of things this doesn't address and doesn't fix, like we'll have to have a second episode. But the short version is that, let me actually steelman this particular act a little bit. What it does is it provides legitimate people who want to do legitimate things honestly a way to do that with a clear compliance checklist. So we might see more legitimate coin offerings that are not memes and are backed by real promises and offer real value, because now there's a pathway for that. And it's sort of like people who don't take this regulatory pathway and just offer, the next rando coin or whatever, should be seen with even more skepticism because there is a regulatory pathway to do this above board. But it's expensive. Like I said, you have to have it super collateralized. You have to have you have to raise a lot of money to issue one of these coins because you have to have dollars on hand to actually pay people back if they want their money back. And that kind of stuff is expensive. But so I think the Steelman story is this act will allow more legitimate business, and that might crowd out some of the illegitimate business. In terms of the illegitimate business, though, no, this does nothing to enforce or enhance or increase policing against things that are not stable coins. And again, I started this by saying, again, it's like complicated, but blockchain is a technology. If you build something on that technology, you end up with some type of digital asset. One of those types of digital assets is cryptocurrency, and a subset of those cryptocurrencies are stable coins. These meme coins were not stable coins. They were speculative coins. They were like, Dogecoin or whatever was something people bought because they thought more people would buy it because they thought the price would go up, 50x, and you go buy your Lamborghini and what have you. No, when Lambo, right? I mean, that's like part of the crypto rallying cry.
Lamborghini.
When,
yeah. Get it right.
Yeah, you get it right. So that's a meme. So, to go back to your question, this act doesn't solve other problems, but in my opinion, it's an important step forward because by creating legitimate legal pathways for valid businesses to do the right thing, you at least stand a fighting chance of crowding out some of the fraudsters. And maybe you get the SEC busy with dealing with real fraud instead of screwing up our entire blockchain infrastructure.
Yeah, definitely. So we have just a few minutes left here. You also have a law review article, The Genius Dilemma, Innovation versus Anti-Fraud and Stablecoin Regulation, which I'll also put in the description. Is there anything in that you want to mention before we wrap up?
Well, it's a little bit of a technical paper, so I'll try to do the very superficial version, which is there are reasons why we have a Securities Act, and the Securities Act means that if you issue something which is a security, which by the way is defined as an instrument which gains value because of the efforts of others. So that efforts of others is like the core prong here. If you buy something that is a security and somebody lied to you about it, you can sue them for a violation of what's called Section 10b-5 of the 1934 Securities Exchange Act. And there's private rights of enforcement, which means that you, as a human being, as a normal person who got lied to, have your day in court, your day in federal court, where you can claim damages. The Genius Act, by making stable coins not securities, means you can't use securities law to get remedies. That's not an option. So if you get lied to about a stable coin, there are some rights of action that haven't been created yet, and there are some instructions in the law that some regulators need to figure this stuff out. But that whole 10b-5 regime, that whole private securities litigation theme, that whole idea of I can sue if you lie to me about an investment opportunity, that's gone from these products. So that creates a certain gap in your ability to protect yourself through litigation. Now, in my own opinion, I think that the Genius Act did a pretty good job of I would rather prevent bad things from happening than having people go to court when they do, because when I have to go to court, I have to put on a necktie, and I hate wearing neckties. So I don't want to go to court. I'd rather just solve it. And
as someone who's not a lawyer, I got to hire someone who wears a necktie that can represent me, which costs a lot of money.
That necktie costs at least $600 an hour. That's no fun, right? And you pay 10 cents a page for copying or something, right? So no, it's no litigation. The only person who wins in litigation are the lawyers. And so avoiding that is a real service. I think the Genius Act avoids a lot of litigation by having requirements up front. They're expensive. It's not clear that America will be competitive with offshore versions of this. And again, it doesn't touch what states do. At least it doesn't seem to. So there's some holes here. But I think those holes can be filled. And there are instructions in this act where regulators can create some anti-fraud regime. It really needs its own bespoke anti-fraud regime. Because if somebody says, hey, AJ, do you want to buy my super awesome live free or die stablecoin? And it's backed 1-to-1 by US dollars. And it turns out that it's only algorithmically backed, like meaning I don't actually have dollars in the bank account. I have some app which is supposed to, I don't know, whatever. Like Terra did this. I don't know exactly how they did this, but they claimed to be a stablecoin, but they were only an algorithmic stablecoin, meaning they didn't actually have dollars. So that would be maybe a lie, and it would be nice if you could sue the pants off them if you had to. But even better than that is those bad actors shouldn't be able to offer this stuff in the first place. And the Genius Act, provides a way for legit people to do some legit things that are worth doing.
So we kick this off saying alleged smart person. I say definite smart person. Professor of Law, Seth Oranburg of UNH Franklin Pierce School of Law. Thanks for talking to me today.
Always a pleasure. Talk to you soon.
law.unh.edu to check out what UNH Franklin Pierce is up to. I'll put in the episode description links to the articles we've discussed today. Please be sure to check them out if you're interested, especially in the crypto space. Really interesting information there. Thank you to WKXL in Concord and Manchester for picking up the show. Next up is going to be Facing the Future by the Concord Coalition. Thanks to thegranitegrok.com for sharing the show every Saturday. And as always, newenglandtake.com. Be sure to like and subscribe on Facebook and all your YouTube, X, all your favorite podcast platforms. Everywhere like that, you will find me, and we'll talk to you soon.